Welcome to Stock Talks with Aakash. Follow this channel to create a money mindset. Hey, hi there. Welcome to part 3 of how to read an annual report. And this is the last video of this series. Today we'll be doing this section, the financial one. Okay, we will be seeing the standalone financial statement. First of all, we will see the independent audit report and then 3 standalone statements, and afterwards, of course, it is the same near about, and the 3 consolidated ones. I always see consolidated ones whenever I take any investment decision because it gives me the full picture. So now let's get into it. Okay, so we are here on the page of independent auditors report. um So just I'm telling you in a very brief, why is independent auditor required? Okay, very briefly is that you and me, the shareholder of the company, cannot go inside a company and ask for the financial statements and cannot verify it. Okay, so what happens is it is mandatory by the government to appoint an independent auditor from the company so that it can check the financial statements if it gives a true or fair view or not. That's it. Okay, we have to just check the statement. It gives a true and fair view in conformity. If it is good, if it is there, it is good. If it is not there, then it's a concern. Okay, it's a single parameter in which you can change your decision or invest or not. Okay, let's go to the financial statements of standalone. Okay, so we are here in the standalone balance sheet. Okay, what we you need to see it, you need to see that the assets are growing or not. Okay, so it's 227 in the previous year. Of course, it is in crore, and it's 244 crores. So it's increasing, which is good, right? Let's give me a pen. Okay, it is increasing, it is good. Over here also, it was non-current assets, and now let's see the current assets. The current assets also are increasing, which is good. Now let's go to the other section. So this is the equity and liability sides. Very important is total equity. It should always increase, which is the case over here as well. Liabilities should decrease. Borrowings is the money that the company owe to the banks or from where it has lended it, and it should decrease. So from 90 crores it goes to straight to 8 crores, which is extremely good. Okay, borrowings are decreasing. These were actually non-current, whereas now let's go to current one. 193, it goes straight to 257, which is bad. Let me show it to you with red. Bad. Okay, this is not good. However, we need to assess it further, because what if it is using this amount in capital expenditure? So company usually borrows money to take care of their capital capex need. Okay, we have to see that too, right? So let's go to the other statements now. Now we are over here in standalone profit and loss statement. So revenue from operations, this is also known as top line. Okay, So revenue from operations should always increase, which is good sign. Okay, this is increasing. Revenue means sales. Sales should increase. Okay, sales is increasing. Proportionately, expenses also increases, which is okay. Okay, so let's now see profit after tax. So profit after tax. Yep, over here. Which is over here, if you may see. From it has been increased from 101 to 179 CRs. So which is good. So this is earning per share. Earning per share was 14. It is now 26. Increased. Good. Okay. Now let's go to the other statement. So we are here in which statement? Standalone cash flows statement. This is the third one. Cash flows from operating activities. It should increase. And it has, which is good. Now let's go from capital, operating profit on working capital changes, cash generated from operations, increased, which is good. Now cash from investing activities. We should always invest in the future, which it has done. And financing, we are able to pay the loans. Yes. Cash, okay. Well, this is a concern. This is not a cash-rich company. Okay. Over here, it's a very big concern, by the way. Not cash-rich. Also, it's a capital-intensive industry, so that is also one of the reason. However, it is a concern for this company. So always, you know, be wary when you are investing in such companies. And also, it's a small cap, by the way. Small cap companies. Well, this is an important subsection in the annual report, which I think you should always have a look, is the repayment of the loans. So in this section, it tells you from which bank does the company have taken the loan, at what rate of interest, and what's the current status. So as of now, March 31st, 2024, as of this date, the company has paid the total loan amount for IDFC Bank. And if you will scroll down, it gives you all the banks and the current status of the loan. Let's say it was Punjab National Guaranteed Emergency Credit Line. 6 crores was the loan and it has been paid. If you could see, it states this loan has been fully repaid as of March 31, 2024. So you should always check in these details as well. Consolidated financial statements. Okay, so over here it's the same thing. We have to see assets should increase. Let's select again the green one. It is increasing. Good. Okay, did we have seen non-current assets? Now let's see the current one. Okay. Yes. It is also increasing and total assets has also been increasing, of course. Now comes the equity. In equity, other equity is the most important one which we have to see. Yes, it has increased. which is good. Borrowing should decrease. Ideally, over here, borrowing, it has not actually decreased, it has increased, which is ideally not good. You have to analyze it further. Okay, over here, all is well. Borrowings have increased, which is not good. I love the debt-free companies, however, this is not the case anyway. Let's go to profit and loss, revenue from operations. Again, it is increased. Good. Profit. Let's see the profit for the year. Over here, 24. Yes, slight increase, which is good. Okay. Earning per share increased, which is good. Let's go to the cash flow. Profit for tax, of course, it has increased, which is good. Let me just show it to you. 274. Cash generated from operation is 91. Okay, which has decreased, which is not good. No, not at all good. Cash generated from operations has decreased, not at all good. Okay, and also I think, yes, how much was the cash? Yes. So net cash is 42, and if we minus it from 98, which is free cash flows, it has a negative free cash flow, which is not at all good. And it's a concern. Negative cash flow, if you have for few years negative cash flow, you cannot pay your uh, employees, which is a concern for me. Yep, I think that's all. So thank you for watching, guys. So we have all positives as well. We have positives as well. We have negatives as well. You have to analyze if it in total gives you a positive outlook or a negative outlook. This company has a huge debt. It has negative cash flows. Okay. However, it has a good tailwind from EV space. If EV space goes down, this also goes down. Okay. So take your decision wisely. Do analyze it more, because I was very brief in this. If I will be telling you each and every details of this annual report, this video will go till days, because it's so many things that we have to show it to you. Okay, this was a very brief how we will go through it. However, you have to read each and every page, but there are lots of definitions and you can skip that. You have to majorly crunch the numbers, okay, as we did over here briefly. Okay, thank you for watching. Stay tuned for more videos like that. Bye.
Disclaimer: the information provided is for educational and informational purposes only and should not be considered financial or investment advice. I am not a SEBI registered investment advisor or research analyst. Investing in stocks involves risk, including the potential loss of principal. Always conduct your own research and consult with a qualified financial advisor before making any investment decision. Past performance is not an indicative of future results, and all investment carry inherent uncertainties. The author and associated parties are not responsible for any financial losses resulting from the decision based on this information. This channel does not promote any form of current returns or insider tips. Always invest responsibly. Thank you.